So in my quest to build the perfect dividend portfolio, I'm going through each of the sectors and I'm looking at the top stocks that I want to have, the top positions that I want to have in each of the sectors. And I've gone through all of the sectors. I'll put a link above. I have a playlist for this. But today I want to talk about the information technology sector. And the stock that I'm going to go all in on with all the money, I'm going to sell all of my positions but one. And I'm going to take all that money and I'm going to go all in on one position. And I'm going to share with you my strategy for this and which company I've chosen and why. So make sure you watch all the way to the end so that you know which company I'm going all in the month of July in the information technology sector. Welcome to the channel. My name is Paris Clough and this is Financial Self-Reliance. I'm really excited to help you manage, protect, and grow your money. So in this video, I want to share with you my dividend journey. My dividend journey is one that's taken me years to really understand. When I first got started, all I wanted to do was dividend yield. I was looking for the highest yield, the most payout that I could get because I wanted to make a ton of money. Well, what I realized is that some of those companies weren't going to stick around and they maybe didn't have the best financials, or maybe some of them promised a big dividend and then they didn't really fulfill that promise long term. Maybe a couple of quarters, a couple of months they paid that dividend, and then after a while they couldn't sustain that, so they ended up going away or stopped paying their dividend. And the point of a dividend portfolio is to build a long-term wealth play. That's really what it's about. It's about building that long-term passive income. And so there's 11 sectors in the stock market, and I wanted to have not just a really steady income, but I also wanted to have a good diversified portfolio. So I wanted to choose a few things in each of the sectors. Well, I went to go pick a ton in each sector. I had about a few shares of several positions in each sector, and I realized that was way too much information, way too many positions to have in order to do proper research on each of the sectors and each of the different positions that I was holding. So I'm whittling it down, and today we're talking about the information technology sector because I know I need to whittle it down to the top stock or two in the information technology sector. In fact, I found two stocks that I really want to look at, and one that I'm going to go all in until I get to 100 shares so I can do my covered call strategy, which I'll share with you more about once I get going on it and once I really get it under control. So let's take a look at the spreadsheet that I created many years ago to kind of get me started. So this is my OG spreadsheet that I use to basically track all of my dividends from the very beginning. I have another tracking program right now. I highly recommend that you get involved in using a tracking program so that you can keep track of everything that's going on. So I'll share that in a minute. But this is the original spreadsheet that I had. So as you can see over here, it says information technology is the sector we're talking about today. So I actually held 4 positions. And one was with Cisco, one was with Hewlett-Packard Enterprises, not to be confused with HPQ, which is one I'm actually down here in my watch list. And then I have IBM, and then I have Intel. And IBM is one of those ones that's, I think, is a dividend king. 27 years of dividends it's been paying. So IBM is a really solid company. And then Intel is really coming up right now, and really there's a lot of things going on in the chip market and the chip world with Intel, Nvidia, AMD. All of these shares or all these companies are really looking good, and maybe they're just going to have a breakthrough depending on how this whole thing comes out with the ruling on the chips and the chipset opportunity that they're going to have. So what I like to use now for my tracking, or at least in addition to my spreadsheet, is what's called the Dividend Tracker. Now, the Dividend Tracker has a free version and it has a paid-for version. You get more bells and whistles, obviously, if you use the paid-for version. It's a really great way to track your dividend portfolio, your dividend positions. It's a great way to look at the dividend grades, how well they're doing, what the consistency is. It's a great way to do research. It's a great way to have your annual income. You can see right here, you can have your dividend yield of your whole portfolio. You can have yield on cost. You can have just some great information all in one place on the Dividend Tracker. So I highly recommend using the Dividend Tracker. So let's take a look at each one of the positions that I had. The first one I want to take a look at is Cisco. Cisco System, ticker symbol CSCO. They have an 87 out of 100 on their dividend grade, which is a fantastic grade. They have a great payout. And let me look over here on Seeking Alpha though. Seeking Alpha has them at dividend safety a B-, dividend growth A-, dividend yield A, dividend consistency B. Their yield is 3.4. Payout ratio is 44%, which is great. 5-year growth rate is 6.4 and a dividend growth of 11 years. So Cisco is definitely staying on my watch list. I sold Cisco to be able to go all in on another stock and I'll tell you why in a minute. So let's take a look at HPE, or Hewlett Packard Enterprises. They have a 64 dividend grade, which is also a decent dividend grade. It's on the higher end, headed towards the green, which is really good. Seeking Alpha has them, Hewlett Packard here, as a dividend safety a B-, dividend growth C+, dividend yield A, and dividend consistency a D+. So the dividend consistency is not fantastic. Their yield is 3.69, which is a really nice yield. They have a 5-year growth rate of 18%. Now that's not something to shake a stick at. That's a pretty decent growth rate. However, they haven't had a dividend growth in years, 0. So there's that to balance out. So I also sold my HPE. I sold HPE in order to be able to buy and go all in on this one position I'm going to talk about in a minute. So IBM is the next one. They have a 49 out of 100, even though they've been doing it for 27 years or 23 years. Dividend streak down here. Seeking Alpha says 23 years. Sorry, I was my spreadsheet was a little off, a little outdated. But right now IBM's got some strange scores. It's NA, dividend yield is an A+, and then consistency is an NA. So with 23 years of dividend growth, I would say the consistency's got to be there somewhere. So I don't understand why they have an NA there, but the dividend yield is 4.75. It's almost 5%, guys. That's like really, really good. It's nowhere near what inflation is, but I'd rather be earning 4.5 to 5% in a 9, 10, 20% inflationary period than earning 0.1 or 1% like I would at the bank. It's just ridiculous. So if you're going to put your money somewhere, put it in dividend stocks. The good thing about IBM, although it has a hold rating, is that IBM is one of those strong companies that's going to be around. And you can see that the 52-week high is 144. So it is at a discount right now. We are on a discount if you wanted to buy some IBM. I sold my IBM. I sold my IBM so that I could get enough money to go all in on. And here we are. Are you ready? Well, before I do that, let me just remind you about my Facebook page. If you'll go to the Facebook page here, click where it says Financial Self-Reliance on Facebook, click More, click Groups, and join my Manage, Protect, and Grow Personal Finance Investing Group. That would be fantastic. I'm also on Instagram. You can go find me on Instagram and TikTok. I'd love to see you there. Come join, come watch, come be a part of the community, and send me a message. So let's take a look. This is the one that I decided to keep. It's got an 89 out of 100. It's Intel Corporation, ticker symbol INTC. And Seeking Alpha has them over here at dividend safety B, dividend growth A+, dividend yield A, dividend consistency A-. They have a 3.63 yield. Payout ratio is 28.43, 5-year growth rate of 6.25, 8 years of dividend growth. So they have a really good track record of dividend growth. However, when I did my analysis on covered calls, Intel came back with the greatest premium. So they do weekly covered calls with a fantastic premium. So in addition to my other strategies, that was one of the main reasons why I chose to stick with and go all in on Intel. I was able to buy 25 shares of Intel after I sold everything that I had. And I went, and I'm at 30 shares now of Intel. And I'm excited about it because I'm going to sell off some other shares and I'm going to go all in. One of my goals is to, when I start selling off all these shares in each sector, I'm going to pick the best ones in that sector and I'm going to focus in, I'm going to double down, and I'm going to get some of those to 100 shares or more. And once I have 100 shares, I can do covered calls, and then I can really enhance my premium. I think I can get to $200 or $300, maybe $400 a month just with covered calls, and then I want to grow that to $1,000 a month in covered calls in addition to the dividend yield that I'm getting. So if you want to follow along in my journey on how I'm using my dividend portfolio to then go and do a strategy with covered calls and make additional money in premiums, make sure that you subscribe to the channel so that you don't miss any of the videos that I produce. Okay, also before I let you go, I wanted to share with you my income for the month of June. And in June of 2022, which is the green bar here, I was over $100, $110.10. So I'm pretty excited about the month of June being a really good dividend month, over $100. My goal is to get this portfolio to making $100 a month, and then from there increase it to $200, $300, $400. So I'm almost at that goal of $100 a month on average. And so once I hit that goal, I'll move over to the next one. Let me show with you my projected income for July. This is another really good reason why I like the Dividend Tracker, because I can come here where it says payout calendar and I can click on that, and then I click up here my Webull portfolio, and then I can scroll down. In July 2022, it gives me all the different companies that are paying, how much they're going to be paying me, and then it adds it all up at the bottom. So the month of July, I should have a $73.97 payday on my dividend payday. So this is a fantastic tracker for you to use to be able to find out exactly how much money you're going to be making. As you can see, in a couple months, I'll have a $215 month. That should be my biggest month in the history of my dividend portfolio. So I'm super excited about that. If you missed the last video I made, you can find it here. Go ahead and subscribe to the channel up here and watch this video that YouTube thinks you might like. I hope you have a great day, and I look forward to seeing you on the next video.